Hey everybody, it's the Investments Lawyer, and today we're going to do a key terms deep dive into investment periods. And remember, nothing we talk about here is legal advice. For that, talk to an attorney. Okay, so we're talking about the investment period. The investment period is a time during a closed-end investment fund's term during which the fund is making new investments. After that, it cannot make new investments. So let's take a look at the language we have here to the right. So the fund may draw down commitments from LPs to make new investments at any time during the period commencing on the initial closing date, so that's when you start admitting LPs, and expiring on the 5th anniversary of the final closing date. So the term of the investment period can change, but this is a standard one we have. This corresponds to a 10-year fund life. And so usually about half of the fund is the investment period. So here we have the 5th anniversary of the final closing date. So like I said, during that time, the fund is making new investments. After the investment period ends, the fund cannot make new investments. Now we have this bracketed language here, provided that such period, that being the 5 years, may be extended beyond the 5th anniversary for up to 1 additional year by the general partner. So this is an option. This is not in all investment funds, not in all closed-end investment funds, but sometimes the GP might give themselves a little bit of wiggle room to extend the investment period and keep making new investments. Are you just finished calling capital after, in this case, 5 years after the investment period's over? So the answer is no. And so most fund agreements allow you to continue calling capital for certain predetermined purposes. So down here at the bottom of the sample language, some permitted investments or permitted uses of capital after the investment period ends include fund expenses, so paying for deal costs, paying management fees, things of that nature, audits, lawyers, blah, blah, blah. So another one is in-process transactions. If it's the investment period, when you start a transaction like buying an apartment building or investing in a company, but then the investment period ends in the middle of the transaction, you can finish it up. Third is follow-on investments. So if you've invested in a Series A of a company, you could still typically do Series B, Series C out of the same fund after the investment period ends. So that's usually permitted. And then finally, investments approved by the limited partners. So you can always say, hey, LPs, is it okay if we do this investment even though the investment period's over? And they can always approve that. Okay, so thank you for sticking around. Again, this is Key Terms Deep Dive into the investment period. I'm the Investments Lawyer. Why am I wearing a cowboy hat? There is absolutely no reason other than Alexei Chernobytsky and SFR Investor have been haranguing me into wearing hats more. So the tribe has spoken, more hats. So if you have any questions, let me know, and hope you have a good one. See ya.